The well, the answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock.
Say you buy 100 shares of a company for $10 each, and each share pays a dividend of 50 cents annually. If you invested $1,000, you would receive $50 in dividend payment over the course of a year. That works out to a 5% yield. Not too shabby, right? What you choose to do with your dividends is up to you. You can reinvest them to buy more shares of the company, buy stock in a different company, save the cash, spend the money. Dividend investing is an excellent way to generate regular passive income. Regardless of whether the company's stock price goes up or down, you would receive those dividend payments as long as the company continues to disburse them. Unfortunately, this strategy's major downside is that it usually takes decades to experience any worthwhile results. But what if there was a method to use dividend income to retire earlier, allowing you to genuinely enjoy your younger days? In today's video, we will talk about the fastest strategies to rely solely on dividends. However, before we begin, make sure you like this video. Buying stock of companies that consistently pay dividends is known as dividend investing. The idea that dividend stocks are exclusively good for retirees or risk-averse investors, that is not true. To benefit from their long-term returns, you should think about purchasing dividend-paying stocks whenever you begin investing. In the past, dividend stocks, particularly those of businesses that consistently raise their payouts, have outperformed the market with lower volatility. As a result, dividend stocks are a wonderful addition to any portfolio because they may assist in the creation of a diversified portfolio. The beauty of this dividend investing is that it offers a stream of income independent of the ups and downs of the stock market. Instead, dependent on the company's success, dividend investors get regular payouts. In retirement planning and during weak markets, this might offer a more consistent return that can be attractive. One of the most well-known supporters of dividend investing is Warren Buffett. His methodical approach has enabled him to become a phenomenally successful investor. So dividend investing is a smart place to start for those wishing to follow in his footsteps. Depending totally on your lifestyle and projected spending, you will need to invest a certain amount of money in order to live off dividends. The US Bureau of Statistics estimates that the average American spends about $67,000 annually. This amounts to almost $5,600 each month on average. You might not require more or less than this. Therefore, it is crucial that you adjust this figure in accordance with your spending habits. If you can manage your money wisely, a little investment in dividend stocks can provide you with enough income to pay your essential living expenses as well as some discretionary spending. Of course, your income will increase as you invest more money, but you might be shocked at how quickly you can actually do this if all you want is to retire soon and possibly with dividends. Therefore, for the sake of this video, we will use a $40,000 annual income objective, which should be sufficient to meet most people's essential living costs. Dividend investing is fundamentally a long-term strategy that demands two things: discipline and patience. To accelerate the procedure and reach a step closer to financial independence, you can employ two basic strategies. Covered call ETFs are one of the quickest strategies to live off dividends. A type of fund called covered call ETFs allows the investors to get income from both the rise in price of stocks and dividend payments. The ETF invests in stocks, but additionally generates revenue by writing call options on these same stocks. Call options gives the buyer the right, but not the duty, to purchase a stock at a particular price within a specific time period. Therefore, the ETF receives premium income that is distributed as dividends when it sells call options on the stocks in its holdings. Furthermore, since the ETF will be compelled to sell those equities if the stock price climbs above the call option's strike price, there might also be capital gains earned. The most well-known covered call ETFs are QILD, XYLD, and RYD. The appealing double digits yield on these products are far greater than the yields on many typical dividend stocks. These covered call ETFs, 12-month trailing yields are 15.96%, 14.18%, and 13.76% for QYLD, XYLD, and RYD respectively. These ETFs have the advantage of offering income from both dividends and option premiums, resulting in a more consistent flow of passive income. These ETFs do, however, carry some risk because the stock's price could drop or the options could expire worthless. So how much would you need to invest in covered call ETFs to retire? At current yield levels, you would need to invest $250,000 and $300,000 if you wanted to make $4,000 per year on covered call ETFs. Not bad at all, right? Particularly when compared with conventional dividend stocks, where you would need to invest roughly $2 million merely to reach the same level of income. The second method of living off dividends more quickly is to put money into high-yield real estate investment trusts, also referred to as REITs. Companies called REITs invest in properties that generate income, like office buildings, apartment complexes, and shopping centers. These businesses frequently distribute a sizable portion of their profits to shareholders in the form of dividends. The top REITs for dividend income include Omega Healthcare, Apollo Commercial, and Blue Rock Residential. These REITs have good records of regular dividend increases that give their shareholders a stable flow of cash. In the past 20 years, US REITs have generated an average annual return of 10.8%, according to CBRE Investment Management. These returns can fluctuate, greatly depending on a variety of factors, including market circumstances and occupancy rates. REIT investments have the advantage of greater yields than regular equity investments. However, because these businesses are more likely to be impacted by economic downturns, they also carry a larger risk. How much would you need to invest in REITs in order to retire? You would need to invest about $450,000 if you wanted to profit from REITs at a rate of $40,000 each year. Now, let us assume that the average yield is 10.8%. Therefore, the actual figure will change depending on whether you diversify into several REITs or put all your money into one. By making continuous weekly investments and reinvest in dividends until you achieve your desired portfolio size, you could easily retire with REITs. It is undoubtedly possible to achieve financial independence through investing in as little as 5 to 7 years with the right amount of patience and dedication. The final thing to remember is that you should always have a plan while investing for dividends. You should be well aware of your financial needs as well as your objectives. This will assist you in choosing the best stocks for your portfolio and help you stay committed to your long-term goals. To achieve this, you must determine your living expenditures and make sure that your investment produces an income sufficient to pay for them. You might be able to survive on less than $40,000, but if you have a family, you might need much more to maintain your desired standard of living. It is also important to note that, in contrast to regular dividend stocks, covered call ETFs and REITs often distribute shareholders' dividends on a monthly basis. Due to this, both of them are now much more desirable options for investors seeking to profit consistently from the stock market. There you have it then. Buying stock in companies that consistently and reliably pay dividends can help you achieve financial freedom. Regardless of whether you pick stocks, ETFs, or REITs, it is important to understand the risks involved with each investment and create a strategy that meets your appetite for risk. Through dividend investing, you can quickly reach financial independence with a little bit of patience. What do you think? Would you invest into covered call ETFs? Or maybe you prefer REITs? Let us know in the comments section below. As always, I hope you enjoyed today's video, and to learn more about interesting facts about finance, click on the next video popping up on your screen right